Okay, hello ex-traders, and we are at the end of week 1 for October. This is November 4th, and we looked at 5 tickers, I believe. The first one was Bank of America, and we were bullish on it. And it looks like we were bullish, but Bank of America wasn't bullish enough. So basically, I zoomed out here because I want to go a little more. Okay, so this is what the ticker has done for the past year, pretty much. So we had said, and for some reason I had this, this must have been an old line because it was in a different color than what I normally do, is yellow, which is more visible. So this was the downtrend that it had been on, and we expected, sorry about that, I think my other computer tried to sign in or load the page. So basically it had been, as you can see, quite bearish from the beginning of the year. This is the beginning of 2022, pretty much January. So from here, all of 2022, it's been doing kind of that, and it did try to base here and then rallied up a little bit, but then it came back down and it broke through what would have been actually quite solid support, because this is on a daily. I'm not entirely sure. I guess it's also visible from the daily, but not entirely sure why I marked that as dashed, but that is what it should be. So this is, if we zoom in to basically the last 6 months, which would be something like this, okay, even though it had been on this downtrend, you can clearly see that it based here and definitely bounced off, and it got dragged back down, and then it took off. Now this takeoff was a lot, actually it was quite as significant as the previous one. So one of the things that you want to look at when you're looking at price action on a chart is, okay, it does break through quite drastically, okay, through here. So really fast. It basically took 1, 2, 3 candles to go down from 35 to basically, well, 32. That's only a $3 drop, but it's a lot for Bank of America. Bank of America is not a stock that moves a lot. So it broke through, and then when it based down here, look at how quickly it recovered in one day, from 30 to 31, 32, almost $2, which we just said is not a typical move for Bank of America. It didn't, it's like, it didn't really like being down here. Okay, so it really shot up. And then look at it again. It breaks down through this support over here at 32 something. And it actually manages to go down past this level at 30, but it immediately rockets back up. Okay, and that tells you a lot about how, I guess, solid a stock is. I mean, if it kind of lingers down here for a long time, or it would have lingered a lot more down here, then it probably would have headed back down. So we were bullish on this stock because it did try to rally once before. It did try to rally basically again. You could, even though it's not a very clean double bottom, you could still argue that this is, it touched once, it touched twice, it touched 3 times, and then it touched again here, even though it's it's quite a few days, and then it touched again, and then it rocketed back up as soon as it broke below. So this is a very strong support level. So we rallied back off of this one, and it broke through this. This is the sort of trend line or pennant that it was trading in ever since it started trying to recover. You can see this line right here, which I'm going to make it just so that it's a lot easier to see. Make that a 2 pixel line. Okay, and this one, these are the lines that it was bouncing around on. Let me zoom out just a little bit more. Okay, so you can see that as soon as it came back down, okay, that second time after that rally that it tried to use to break this long-term trend line here. It broke out of it above, and then it came back down in it. And then as soon as it tried, and then as soon as it's in here, it starts bouncing off as resistance, bouncing off as resistance, bouncing off as support, bouncing off as resistance, resistance, support, support. So it's, it was doing pretty much, it was doing its thing. It was definitely doing its thing. So how did we decide to go in here? Well, as you can see here, it breaks up above this resistance that it had, but then again, it did break up above here. Now look at this area right here, just so that you can see when is a breakout going to hold. A lot of people, a lot of analysts, a lot of traders, as soon as it breaks out and a 5 or a 15-minute candle stays up above the resistance that it was breaking out of, it's considered a breakout that's going to hold, right? So here it broke out and it stayed out, so that could have been. But then look, it gapped back down and then it rocketed back up. It closed above again. And this time it opened above and it closed above, but then it immediately came back down. Now, when it tested this line again, so the minute the next candle after the breakout, whether you consider this the breakout candle or that the breakout candle or even this the breakout candle, the next candle that actually breaks back into support or through support and actually bounces away from it is what I consider a breakout that's going to hold. And a lot of people, you'll hear a lot of traders say, well, it confirmed, it retested that level, it touched it, and then it bounced out. So here it bounced, but that wasn't a very decisive bounce. Look at that doji. That doji is, basically undecided price action. There's not enough buyers and there's not enough sellers, so it just kind of, it makes like a little doji or a cross or whatever. So the next candle actually breaks through and holds down below. So that was a failed breakout. It tries to break out again, it fails again, and then the third time, this time, it breaks up, it closes above. This is a doji, so this is still undecided, but here it touches back on this line and it rockets back up. And look at that, it's a pretty big candle right there, and it's definitely decisive. It's definitely on the bullish side. And then it keeps going and it keeps going. So we started on Monday, which was right here. So this is where we were on this doji right here. This is where we were. And we decided that we wanted to take a bullish call or a bullish play on this. And our first resistance, up above, was this swing from this candle over here, which is 36.6 something. So if it broke up above and held, we were going to take that call. Now, unfortunately, this is what happened during the week. Okay, so it's still above this sort of price pennant here, and it did break above and bounce off of it quite solidly, and this is definitely a bullish run above that support, which is now support, used to be resistance. And this is Monday. So Monday, it doesn't do anything. It's very undecided. Tuesday, it tries to, but then it actually ends up lower, so that's not very good. And then on Wednesday, it's even worse because it does go up, it does break above our entry, which is right there, but it ends up way lower. So there's a lot of rejection at this level. And then Thursday, it's even lower. And then Friday, yeah, it's kind of up. A lot of market news, really. And it did close above on the daily, and it probably closed above on the hourly as well. There we are. Okay, but it just barely closed above. Okay, that's where it is, right there. So it barely closed above our entry point. So what this is, it's good that we got an example of this. And this is not a bad thing. This is simply a no trade. Okay, so if it doesn't reach, and this is why it's important to have a plan, if it doesn't reach your entry point, then you do not take that trade. It's that simple, and it's not, it's not a bad thing. It's actually a good thing. So we might actually move this trade. Let me see here. For some reason, I'm trying to get a hold of it. It's not letting me. wonder if it has anything to do with the, oh yeah, there it is. Okay, so that handle just kind of disappeared. So we're going to move this to next week, starting here Monday 7th, and we're actually going to keep our levels. It could be a little bit higher, that's okay. It could be that as an entry, and then we could also move our target. But we're just going to leave it here for next week. Okay, so that's going to be our entry. This week was basically a no-go, a no trade on Bank of America, even though the let me move this up here. Kind of like that. It's not so we don't go past into, and then it gets harder to actually find the handles on it. Okay, so that's going to be for next week on Bank of America. So that was a no trade. The next one that we looked at was Oxy. Okay, and I have to say that I actually ran into some issues on the X-Trades trading platform, so I was unable to alert any of these. But Oxy did break through. Okay, here is our, and remember that it was bouncing off of this channel. Let me zoom out here. Okay, here's this like channel that it's been trading in. Try to zoom out. Oh, it's because I'm on the 1 hour. All right, there it is, and that is what we were trying. That is what we were aiming for. We were aiming for, it was not going to come down all the way to the bottom of the channel. It was actually just kind of hang around this middle of the channel, which is that blue dashed line right here. We were expecting it to basically break up and above towards the top of the channel. So what it did was it did break into our entry level, and it definitely might have, but like I said, I wasn't able to enter this trade on the platform. So let me see, Monday would be somewhere here. Okay, so this is our Monday candle right there. It did break above, but it didn't close above our entry, which was 73.20. And then on the second day, it did close above, but it ended down. And then on a third day, we probably would have stopped out, to be honest. And then here on Friday, but by then the premium would have been, you know, so burnt that it probably would not have been worth trading it. So that would have been right here. Okay, so that's exactly what would have resulted in the exact kind of play or price action that would have resulted in premium being burnt. So that was Oxy, and let's take a look at Pfizer. Okay, so here's Pfizer, and here's our play for Pfizer. This was Monday, and Monday it didn't break above. Tuesday it did break and close above, but then on Wednesday again it just came back down. Okay, so I was actually lucky that that the trading platform didn't work for me. I actually put this trade on, and I put it on Monday, and by Tuesday it was green, and even Wednesday it was still green. But there was a bug with the trading platform, and I couldn't get out. I couldn't manage the trade. So by the time I got to it, well, actually I didn't get to it. It was just basically eliminated, but it was definitely in the red. So Pfizer again, that would have ended up as a bad trade. And let's see AT&T. Okay, so AT&T, this is Monday right here, and it was above, because I think I was actually looking at this ever since last week, but I wasn't able to get in it, and I definitely would have gotten into it on Monday, again, like I said, if I would have been able to, and it would have stayed green through most of the time. It stayed up above our target. Okay, so the AT&T one was probably one of the better, actually the best one. And then the XLF. Okay, the XLF was also one that would have ended up green, and this is what we basically had in mind. Our price target, I'm not sure why it was past this resistance. It should have been there. But that would have ended up a green trade as well. So it looks like our levels are working out pretty well. So the XLF and the AT&T and the Pfizer one, and even the like I said, the Oxy one might have been good for a while, and even on Friday on the last day. But actually, the one I was most bullish on didn't work out, and that was Bank of America. So I'm actually going to save this, and we're gonna let's actually recap. So we adjusted this one, okay, and the reason I adjusted, or I'm thinking of adjusting, yeah, the entry level is to this swing, okay, which is it's definitely the previous swing. This is not a swing because the candle body is way down here, although these two might be, but this one is lower than the previous one, so it's not a swing. So this still remains our swing high. So that's going to be our entry point for now, and that's good because it'll actually be above, probably end up being above this, the blue MA. Let me recall. The blue MA, I believe, is the 100. Let me just check real quick. Yep, it's green, blue, red. So it's 16, 200, 333. Yeah, it's the 200 MA. So that's the 200 MA, which is quite a serious number. This is the 16, the green one. So we should be pretty good to enter if it does break above this level. Since we don't have any two more candles, this one might end up being a better entry point. So let's adjust this. So we should keep this one because it is this. No, you know what? We're going to follow the rules. That's the swing. That's the one we're going to use. All right. So that's for Bank of America. We're keeping that one. And then Oxy, I believe we didn't fix it. Still bullish on this. So I will indeed keep it the way it is. Let me move this over so that it's ready for next week right there. Okay, so our entry is still going to, let me zoom in here because I've got that swing right there is 75.60, and it wasn't taken out. So I'm actually going to move this entry point up to that swing. Okay, so that's going to be 75.60, I believe we said. No, that can't be 70. Hold on a second. What was that? Get a little better look at that. Let's see. If we are over it, then the high is not the high. The open is 75.50, not 76.50. Okay. So let's do 75.50, which would be right here. Oops, there. Okay, 75.50, which is pretty close to our support. That's fine. Let me see if we can find a confirmation of that support somewhere here. We could end up moving it. I'm not sure why it's there. It's probably there because of this candle, but it's pretty close to this zone. A lot of the support levels are actually going to be zones, so that's fine. We'll leave it at 75.50. That's our new entry, and we will keep that target for now. Okay, so let's go to Pfizer, which again I'm still bullish on, so I will keep my bullish play for it. So we will actually keep that. That's not going to work. Well, yeah, it might work out. It might work out because you see the confluence here of MAs. Okay, they're going to collide somewhere here, so that's going to be a pretty good target. They're going to collide somewhere around 48.92, and our target is 49.18, so that's pretty close. The entry, we'll keep that support level as an entry. This is probably going to be the play that I am least bullish on, just from a technical, and these are all technical points of view. We'll get into the market ones very soon. AT&T, I actually like. I like it quite a bit. It very likely will retrace. You see how it reached this 18-ish, 19-ish, which is this supply zone that it has up above here, and it's probably going to retrace. Hopefully, this the green MA will be good enough, which I believe is the 16 EMA. But if not, then we have the 50 SMA coming up right up here. So it might, if if this starts to come back down, it might hit that SMA somewhere down here. If we draw some fibs, let's see if we can find any confluence here. There we go. So let me move this. Yeah, that 50 fib, it looks like it's right where it has to be. Right where that that 50 SMA is coming along. So that might actually work out. So we'll let this play out, but we will adjust the levels, okay? Because I do expect this to basically maybe come back down a little more. So if it does, then actually no, that's not a bad level, because that's the most solid support on here. So if it bounces, then that is going to be my entry. If it breaks through, then once it breaks back up above, then that'll be my entry. So I'll keep that for AT&T. And then the last one is XLF, which should be pretty similar to the Bank of America. So here we go. And that's probably the most important level there. But that makes it a little bit too far. See, this is one of the issues when you're trying to decide entry levels and stop loss and support, is this is that swing. Now that swing is pretty far from the entry point. From the current price, which is 33.9. That swing is 34.6. So by the time it reaches this level, if you do get in here, then your run up to the top, up to the next swing, even if you move this up, it's only going to be up to 35.80. That's not that much. But it has been reacting very nicely to this 16W. What, is it the WMA? Yeah, which is the weighted. Okay, so it is. It has been reacting quite nicely to it, as you can see. All right, so it bounces, it breaks through, yeah, okay, but then it recovers, and then it bounces again, and then it bounces again here. So it probably has some room to go. So we might use actually this swing. So let me adjust this. You see how this is another swing level? It's not the cleanest one because these two are lower than this one, but this one is not lower than that one. And then these two are definitely lower. And it hasn't taken out that swing. So we'll go ahead and move our, let me move it up to next week, which should be somewhere there. Move the entry up to that swing, and then bring this stop loss down or up to that point of control line, which looks to be a good support resistance line right there. And that's 204 risk reward, so that's not bad. Oh, because I didn't adjust it. Okay, I'll adjust it, but I could definitely leave a runner until it hits this 200 SMA up here. Okay, so, sorry, the 333. All right, so that's what we are going to use for plays on for this week, the second week of November. Hopefully I'll be able to actually get in on these trades this time. And the last thing that I wanted to look at real quick was that I made this other video, which I might end up either combining with this one or which was on spreads. So the thing about calls, naked calls or naked puts, is it obviously has a very high potential for profit, okay? Either to the upside with long calls or to the downside with long puts, as well as shorting them. But it's also very risky because these things can move, against you for a lot of reasons you might not think are justified, but they happen. And so the point is that spreads are a way to actually combine. So I don't know if you've seen that in some videos I've been doing, like, okay, we can do, we either do a long or a short position. So if it breaks above this level, then we want it to run. If it breaks below, this level, then we probably want it to, let's just say like right around here. Okay, so if it breaks below this level, then we probably want it to go. All right, somewhere down to here. Actually, zoom this. There we go. Down to here. Okay, that would probably be the first level, and then the next one would be a runner. So that is what we've been doing. Now, if you think about it, only one of these is going to be right. But spreads, it kind of lets you not, you still only win in one direction, but it makes you profit in an area in between. So basically in both directions. The trade-off is that that win is not going to be as big as the profit of the single, obviously. And I might start getting into spreads later on, but for now, the only one that I did was I decided to do a calendar spread to test it out. Remember in the previous video we talked about the Greeks, and we mentioned how theta and delta and vega were important, and you had to consider them in your trades. The basic, like if you're trading singles, the basic rule is at least delta. You don't want to trade anything that's under 30 delta because it just has a lower probability of ending up in the money. Volatility, which is vega, which is related to IV and IV percentile, is that whenever volatility is high, you want to be selling singles, selling calls or puts, and whenever it's low, you want to be buying them. Okay, so you can use the Greeks even if you're doing singles, and definitely use them to calculate, like I believe I did in a video somewhere, where I calculated, okay, if this is the delta and that's the theta and that's the gamma, then this is what's going to happen. But with spreads, that becomes a lot more important. So in calendars, the whole idea, and you can watch that previous video, or I'll probably try to stick it in here and edit it,